Good afternoon, all. CamelbackTrading.org coming to you this Thursday afternoon, October 13th. We are looking at Window Traders market profile of the ES and SPY. So, to recap, look, we've been banging the drum about how short this market is. It's not rocket science. They shrugged off the PPI yesterday. They shrugged off the Fed minutes. They didn't shrug off the CPI, but it only lasted for about an hour and a half, right? From 8:30 to 10, right? 8:30 the number came out. They just drilled this market down. 9:30 the market opened, pushed down a little lower, and then that was it. We one time framed up the entire day except until J period stopped. So we spent an hour and a half just putting the market into a more precarious position for those who were short. You know, we always try to give both sides of the story to this market way before it happens. We always give both sides of the market. Nobody's going to say sell will come or the lows are in, right? We tell you if this happens, this should happen, and this and that. We said this morning, I said it on the video, I said it in the trading room. 350 was my line in the sand and 3,500 was my line in the sand. Not because it's a round number. I don't care about round numbers. I really don't. But 350.01 in SPY was a weekly low, which if it got underneath that, the next destination on the monthly and the weekly in SPY would have been the COVID all-time high at 339.08, and then below that the 327 level. So any acceptance below 350 and 3,500, you would have gone down another $10 at some point. I'm not saying today, but you would have seen that next level. And then you would have seen if you got to bounce off it. If not, then again down to that 327 level and then down to the 319 level. That was the progression that we would see if 350 didn't hold. Now, does that mean those are out of the picture? Of course not. We've seen this game all year so far. We've had nothing but lower highs. We've had nothing but vicious short covering rallies. That's all this is. Just like I said, I expected it. I also take it for what it is, right? I'm a day trader. Did very well today, not getting in the way of it and taking a nice long and deep period. But I also know tomorrow that could go away in a heartbeat, right? We did have an outside day up. We had an inside day down that failed. We had an inside day up that paid, and we ended up with an outside day up. We all have outside day ups. And Qs and NQ had an inside day up also after the inside day down failed. There's still work to be done. A lot of work to be done. All we did is put the daily. The daily's in balance now. The weekly is still down. The monthly is still down. And that doesn't change. If we think, so you're going to hear people yelling, oh, lows are in for the year. Okay, great. You can say whatever you want. For lows to start being possibly in for the year, we have to take the next step. The next step is to take out a weekly high. I don't think we'll take out last week's high tomorrow. But next week, the next step would be to take out this week's high. Well, that would put the weekly back to balance. So there's another baby step. If at some point, say, November takes out October's high, whatever it is, in the monthly, well, now you're getting to the point where the monthly would be back in balance, and it's getting kind of late in the year, so the odds of the lows being in are probably good then. But that's how the progression would have to work. One day doesn't make a market. Somebody called me out on Twitter when I was saying about how this market, the trade is so crowded it's not funny, and he's throwing out stats about this and that. I don't care about stats. Okay, I'm a trader. I've been doing it for 40 years. You can see the market was short. I'm not talking about the longest term. We know the market's been straight up for 10 years. I'm not an idiot. But I can tell you what, the market was short for the past 5 months, 4 weeks, and how many days. The trade was crowded. And it got even more crowded when we took out at 8:30 when the number came out and went even lower. All it did was you talk about a raging fire, and then somebody dumped 1,000 gallons of gasoline on it. That's what D period was. The market's still very short. The question is, how comfortable are the longer term shorts on the monthly and the weekly? If they're comfortable, You won't take out a monthly high. You won't take out a weekly high, and you will continue down. However, if they start getting skittish, you will see the weekly come into balance, and you will see the monthly come into balance. This isn't rocket science. So, again, many people saw what I saw. The market was just too bearish. We talked about this. Everybody's waiting for a crash. We might get a crash tomorrow. We might get a crash Monday. I don't care. I'm flat again. I said I come in flat, unbiased, and look to see what the market wants to tell me. I shorted B period and C period today and made money on it. But then my next and last trade was just a long in D, and that was it. I had to leave early today. So, of course you change with the market-generated information. So, anyway, as far as my trade, I did take 2 shorts in B period. I didn't do anything in A. When you're opening with a gap of $5-6, it's just too big to want to take a short. Now, could I have taken a long against the 350 level and 3,500 level? Sure. But, again, I don't know what's going to happen. Did I know the low was in at 35.01? Of course not. We also got the overnight low rather quickly. If we didn't get the overnight lows, I would have said, well, that's a nuance. But we did get them rather quickly. Now, SPY did get below 350. We got below 350 by $2. ES never got below 3,500. They got to 35.01, right? Whatever the heck it was. 35.02. So, we didn't get it. But I waited. I did nothing in A. But in B period, when we started one time framing up, now you have to look at, well, are we going to go trend up with value lower, the indices down a lot, everything in favor of the bears right now, plus you got the overnight low. So on pushes up, I scalped shorts twice in B. It worked. I did it twice in C. I actually lost money on one of them, made money on one. And then in D period, before we even popped to go get the gap, you can sense that gap was going to fill. Did I know D period was going to have a $9 range? Of course not. Of course not. But I did very well on a 3-lot, on the 3-lot mini on the long side. Today was the second largest range of the year, $19.40. It's also a very heavy volume day right now. We're at 145 million with the after hours. I forget what the highest volume was of the year, but this is going to be one of the better ones for the year. As far as destinations go, for the upside, SPY is 367.51, and then there's nothing until 369.37 daily high, and then fill in the gap at 372.68. That's a $3.31 gap from October 7th. Today's only October 13th. Look how this market swings. I mean, the short-term traders talk about respecting them, how they can rip it, and we said how vicious short covering can be. Well, those are our upside destinations. For our downside destination, we have today's low we have the afternoon pullback low, which is J's low, and that's textbook at 363.96. Now we have a set of single prints that's very large. They start at 359.81 and get filled at 354.72. They're over $5. We had a $6 gap down. We filled it. Now we have a $5 set of single prints to the upside. And then today's low of 348.11. For the ES upside, we have 97.75. Then we have 1750 daily high and fill in the gap at 50.75. The downside, afternoon pullback low, J's low of 62.25. Single prints, they start at 36.19. They get filled at 35.68.25. And then we have O2, which is today's low. And ES missed an 11-wide POC from November 6th of 2020 of 01. SPY got theirs. So, let's go to the charts. So here's the monthly. Has anything changed? No. I don't care we're back inside last month's range. The monthly is down. We're one time framing down 2 months. Okay? Like I said, the longer time frames are still firmly down. So the monthly is down. Do I think we're going to take our last month's high by the end of this month? Really, I don't think so. I think we'd have a better chance in November of taking out this month's high. So right now the monthly's down. I don't want to get ahead of myself at all. Weekly, it's down. Is this a tremendous pushback into the balance we had? Yes, but I'm not calling it balance yet. I can't keep saying the balance got stretched. The low is 357. We went to 348 today. We're down. If it's truly going to come back into balance, well then whatever tomorrow's high is or whatever this week's high is, then we shouldn't have any trouble taking it out next week to come into a 5-week balance. That's all we would be in. But for now, the weekly is down. That's a really nice candle, but we still have a day to go. So the monthly's down, the weekly's down, and the daily is balanced. Markets don't go bear bull. Now, it might seem like we went bear bull today, but it didn't. It didn't. We gapped lower. We were down. It's balance. It's strictly a 5-day balance. Last Friday's high is the high of it. Today's low is the low of it. That's all this is. It's a 5-day balance. Don't think of it as anything else. That's it. It's a 5-day balance. Do we come out of the balance up? It remains to be seen. If we do go up on at some point on the daily, that would mean taking out last Friday's high, possibly filling that gap and getting above the 20. Remember, we talk about lower highs. 1, 2. I said, is this our next one? Remember I said I didn't think that was secure? I'm still not sure it is. So if we do go make another high, but don't take out this high of 411.73, the progression of lower highs to me is still intact unless we really get over this line. So I don't care if we get up above this high here of 379. It'd be interesting to see what happens if we got up there. And as far as our lower lows, well, guess what? We made another one today. Got right down to that line. So the monthly is down, the weekly is down, the daily is balanced. This was strictly a vicious, incredible vicious short covering rally. Is the market still short? Well, you tell me. Look, here's today's action. We took a lot back, but we're still, look, this is where the market started rolling over again, right? The market started rolling again after we failed in August. Lower highs, lower lows. So the market for the 5 days was up in all 3 time frames and then failed. So the market started going down, getting short, attempted to rally, short, attempted to rally, short, attempted to rally today. So what do you think the market is? It's still short. Here's your monthly. We're short. Here's your weekly. It's short. So as vicious as this short covering was today, the market is still short. Does that mean we're guaranteed of going up? Of course not. It depends how comfortable whoever's still short is. Maybe they will be comfortable now because we're still below the 20 and we still have the gap above us. Maybe this was just the weakest of the weak getting out. I don't know yet. Only time's going to tell. Only time will tell. So, the goal of my trading room is to educate and inform people what the market's attempting to do and why before it happens. And I think I do a pretty damn good job of that. So now the question is, how much more short covering we get? Does something change if we do finally take out a weekly high and a monthly high down the road? If not, nothing's changed and we should roll over again. But we kept a lot of people safe in our trading room today, I can tell you that much, and made them money. Hope you had a good day trading. Enjoy your evening. And we'll speak prior to the opening tomorrow.